Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay. The S&P 500 was higher on the opening bell and reversed strongly lower after the JOLTS jobs data showed a very hot jobs market, a lot of jobs being searched for, and there's not a lot of workers to fill them. This is on the heels of yesterday Janet Yellen saying inflation posed a bigger threat to the economy than she had previously thought. Let's just think about why that might be the case. If there's a really big demand for jobs and the supply unemployment rate is very low, that means that wages will go higher. Now, higher wages mean that companies will charge more for their goods and services. That means that the cost of living increases. People have less money to spend and they need to go back and ask for another raise, which is an inflationary cycle, the types that the Fed really wants to avoid. That's the worst type of runaway inflation that they could foresee. And so they're really keyed in on potentially just slowing the economy down to take care of that. And that remains to be seen if that actually happens, but that is the risk that we're looking at right now. So on today's action, we had a lower high from yesterday, a lower low from yesterday. So it remains to be seen whether last week's rally was just a bull market rally or we're going to be in some sort of consolidation period. The VIX, for its part, isn't giving us a big clue one way or the other. We're still muted on the VIX, under 27, 26 and a half on the VIX right now as I'm recording this video. So not a big sign. There potentially maybe a little complacency on the VIX, or maybe people are justifiably saying that the market's going to consolidate here. The rest of this week, we still have a lot more inflation and jobs data ahead of us. So any big move could be happening at any time. For Equity Armor Investments, I'm Joe Tigay.